Hey guys, welcome back to my YouTube channel, and this is a 30 days ICAN business environment audio challenge. So I'll be trying to summarize the whole business environment study text into a 30 days audio reading. Are you preparing for the ICAN exams and struggling to stay consistent with reading? This 30-day challenge is designed to help you study smarter, not harder. This is not a tutorial and it is not a class. It's a simple, focused approach, an audio reading of the ICAN Business Environment Study Text. Perfect for learning on the go, whether you are commuting, resting, or doing chores. This is okay for you. So how to get the best out of it? Use earphones for better focus. Listen actively, don't just hear. Pause and reflect when needed. Repeat sections if necessary. So let's begin. If you are ready to stay committed and make real progress, this challenge is for you. Don't forget to like, share, and subscribe. So for the last reading, we read on sole proprietorship and partnership. So today we are going to check out on the limited liability partnership and limited liability company, still on types of businesses. So let's go. Limited liability partnership. A limited liability partnership is provided for in Part C of the Companies and Allied Matters Act, CAMA, 2020. CAMA, Companies and Allied Matters Act, 2020. This form of partnership differs slightly from the general nature of a partnership, making it unique. Generally, a partnership is not a legal entity and dissolves upon the death of any partner. However, under CAMA, an LLP, which is the limited liability partnership, is a body corporate formed and incorporated under the Act, and it's a legal entity separate from its partners. It has perpetual succession, and any change in the partnership of an LLP does not affect the existence, rights, and liabilities of the partnership. The law permits any individual or body corporate to be a partner in an LLP. So both individuals and body corporates can partner in an LLP, provided that such individual shall not be capable of becoming a partner if he is of unsound mind and has been found by a court in Nigeria or elsewhere, or if the person is an undischarged bankrupt. Furthermore, in an LLP, the minimum number of partners shall be 2 partners at all material times. Interestingly, there is no maximum number for the formation of an LLP. The law permits any individual or body corporate to be a partner in an LLP, provided that such individual shall not be capable of becoming a partner if he is of unsound mind or has been found by a court in Nigeria or elsewhere, or if the person is an undischarged bankrupt. Furthermore, in an LLP, the minimum number of partners shall be 2 partners at all material times. Finally, for the winding up of an LLP, the law provides that it may be done either voluntarily by the partners or by the courts, and the LLP so wound up may be dissolved. This means that the partners can voluntarily decide to wind up the partnership, or the courts may do so on the application of the partners. So, the features of the LLPs in Nigeria. 1. Separate legal entity, unlike the normal partnership. separate legal entity. An LLP is a body corporate, meaning it has a legal personality separate from its partners. 2. Limited liabilities. Partners' liabilities are limited to the amount they agreed to contribute or what is outstanding in the event of winding up. Perpetual succession. The LLP continues to exist even if there are changes in the partners, ensuring continuity of the business. Flexibility. LLPs combine the flexibility of a partnership with the benefits of a corporate structure. Designated partners. LLPs must have at least 2 designated partners who are individuals, with at least 1 being resident in Nigeria. No maximum number of partners. There is no limit to the number of partners in LLP. Remember, LLP is limited liability partnership. So registration, LLPs are registered with the Corporate Affairs Commission, the CAC. Taxation, the tax status of LLPs is still being clarified, with some suggesting that they are tax transparent, meaning the partners are taxed on their share of profits. Sue and be sued. An LLP can sue and be sued. It is in its corporate name. So what are the advantages of LLP? 1. Limited liability. Each shareholder who has paid the full par value of his stock is liable only to the extent of his investments. If the corporation fails, he can lose his investment, but the company's creditors have no claim to his personal properties. So capital formation, when members of the general public have confidence in the viability of the business and the soundness of its management, they become encouraged to invest in it by buying its shares and stock. As a result, the corporation can raise a large amount of capital. Perpetual life, the corporation, which has a legal existence, is independent of its owners. In the event that a shareholder withdraws by selling his or her shares or dies prematurely, his next of kin can take over ownership of the shares or stock, and the existence of the business is not affected. What are the disadvantages of LLP? Government regulations. The activities of these corporations are regulated by federal and state laws because they are legal persons. Large initial capital. More capital is needed in the formation of a corporation than for a partnership or sole proprietorship. Lack of secrecy. A company's financial transactions cannot be shielded from public view because shareholders must be provided with annual reports of its performance. Goal incongruence. When there is a conflict of interest between individual goal and the business objective, there is a goal incongruence. For example, employees are usually concerned with increase in salaries, while the organization is likely to be emphasizing profits maximization. Then divergence of owners, management interests. Since owners want their dividend, while the management may desire growth and expansion, conflicts may arise when review of stewardship comes up during the annual general meeting. Organizational expenses. This form of business involves substantial cost of incorporation, allowance for members of the board of directors, salaries of top management staff, etc. Large size. Their large size may bring about reduction in efficiency as a result of bureaucracy when there is too much complexity rigid rules and regulations. So that's for LLP, limited liability partnership. Over to limited liability company, LLC. This is an association of individuals who agree to and jointly pool their capitals together in order to establish and own a business venture that is distinct from its owners. An LLC is a relatively new type of hybrid business structure that is now permissible in most countries. It is designed to provide the limited liability features of a corporation and the tax efficiency and operational flexibility of a partnership. Its formation is more complex and formal than that of a general partnership. An LLC is a new form of business structure which was developed for entrepreneurs who want the limited benefits of a corporation with the tax benefits of a partnership. Like a corporation, LLC requires shares. However, owners are called members, not shareholders. Types of LLC. There are two types of limited liability companies that are easily identified. They are the private limited liability company, private limited liability company, and public limited liability company. So for private limited liability company, this type of company is one whose membership is limited to 50, whereas the minimum membership is 2. It is also known as closed company because the company can neither request nor subscribe to shares from the general public. This type of company is formed with a specific number of persons, and owners' liabilities are limited to their shares. Now, public limited liability company. Here, the minimum number of persons that can form is 7. Remember, the private is 2, public 7. Why it has no maximum number? This type of company is free to invite members of the public to contribute capital for its running by buying shares. These shareholders who are the real owners of the company are free to transfer their shares to other people. It is commonly known as PLC, Public Limited Liability Company. So now let's go over the differences between a public limited company and a private limited company. So for public, it can trade its shares in the stock market and is listed in the stock market. For private cannot sell shares to the public. It can only sell shares to a maximum of 50 people. Public is owned and traded publicly. Private is owned and traded privately. Maximum number is unlimited for public, while maximum number is 200 for private. The public requires a certificate of incorporation and certificate of commencement of business, while private requires only certificate of incorporation. Public requires certificate of incorporation and certificate of commencement of business, while private requires only a certificate of incorporation. Minimum number of directors is 3 for public, while the minimum number of director is 2 for private. For public, statutory meetings are mandatory, while they are not in private. Formation of limited liability company usually starts with the preparation of certain documents that will be presented to the registrar of the companies for his perusal and subsequent registration. This preparation is normally done by a solicitor, accountant, company secretary, or a business consultant. This preparation is normally done by a solicitor, accountant, company secretary, or a business consultant. The main documents that are involved in company formation is 1. Memorandum of association. This document states clearly the relationship between the company and the outside world. Memorandum of association. It specifies the name, location, objective of the company. The memorandum of association has all or some of the following as its content. 1. The name of the company with the PLC as the last word, the location of the registered office of the company, the objectives of the company, proposed amount of the registered capital, a statement indicating the liability of the company's shareholders, and it is a set of regulations laid down to guide the company and its members. Then, articles of association. These documents lays down the internal rules and regulations governing the organization and management of the company. These articles of association of a company contains the following. 1. The duties, rights, and position of each member of the company. The method of the appointment and demand of the directors. The rights and powers of the directors. How dividends are to be shared. How general meetings are to be held, and the procedures. Method of electing directors and voting rights at such election. Method of auditing the company's accounts. The procedures for the issue and transfer of shares, and the rights and responsibilities of the shareholders. The statutory declaration. This document states that the promoters of the company have complied with the requirements of the Companies and Allied Matters Act 2020 as amended. Then there is a prospectus. This is a document of notice, circular, advertisement, or other invitation offering the public subscription or purchase of shares or debentures of a company. A prospectus. A prospectus is issued by a public limited liability company, and it serves as a mechanism for raising capital for members of the public not to be misled. It is mandatory that a copy of the prospectus must be filed with the registrar of companies after it has been approved by the Council of the Nigerian Stock Exchange. The document contains the following information: the names and addresses of all the directors of the company, the types of shares, when and how shares may be bought, maximum and minimum number of shares a subscriber may apply for, the relative cost of the shares, financial history of the company, and possible value of the assets and liabilities of the company. Another document is certificate of incorporation. This is a certificate issued by the registrar of companies to signify that the business unit has been incorporated. This certificate must only be issued after scrutinizing 2 documents, the memorandum of association and the articles of association, then by the registrar of companies, and he is satisfied. He will now issue the certificate of incorporation. The certificate of trading. This is a certificate used to this is a certificate issued to a public limited liability company, also known as joint stock company, by the registry of companies to commence business and exercise borrowing powers. This certificate is issued only if the registrar is satisfied that the company has raised the minimum amount of capital needed to get started. A private limited liability company is not issued with this certificate and does not need it to commence business, whereas the public company needs both certificate of incorporation and certificate of trading. I've read that before. So what are the features of the LLC? It is a legal entity. It has unlimited lifespan and can only be dissolved by state approval. The company is taxed differently from its owners. The personal assets of the owners cannot be sold to pay for the debts of the business. Advantages: is a limited liability company. It is taxed as a partnership. Unlimited number of members allowed, and members can include individuals, corporations, and other LLCs. So what are the disadvantages of LLC? 1. Slow decision making, disagreements among directors, heavy taxes, registration process is cumbersome, and some countries do not allow one member LLCs. So winding up, which is ending of limited liability company. This implies bringing the existence of the company to an end. The following conditions can lead to the winding up of a company. 1. The expiration of the agreed lifespan of the company. Unnecessary delays to commence business for about a year from the date of incorporation. If membership falls below the minimum number of 2 for private and 7 for public liability companies respectively. If the company defaults in filing its statutory reports. The occurrence of events beyond the owner's control, court order, and bankruptcy. We have come to the end of today's reading. Make sure to like, share, subscribe.